Morning, guys. Happy Friday. It's May 9th. It is 5:27 a.m. Central Time. Grain markets are a little bit higher this morning. Brian Split is here. Before we get into the news, Brian, we have a new pope. He's from Chicago. He's a good Southside Catholic boy, just like myself.
He
Thoughts and
wouldn't be wearing the
analysis.
Bears. He'd be wearing a White Sox hat, just like you, buddy.
Yeah, he that may be true. There was something on Twitter that he was actually at a 2005 World Series game. So he's a confirmed White Sox fan. So is this bullish or bearish?
It's bullish Catholicism.
Well,
Bullish
corn,
America.
soybeans, we trade them in
Yes.
Chicago. So
Yeah,
does this is this of impact?
No, I don't know. I didn't correlate the a new pope with anything to do with corn or soybeans in my mind. So not
No.
that it doesn't have one, but I didn't draw one.
I had a beer with them at Cork and Carry on Western Avenue in 2003. No, I didn't.
And you shall make it to heaven, Joe. Good job.
Yeah.
Before we get going, I want to look at some charts, Brian, before we get into the news.
Yeah.
Here's a December corn chart. Tell me what you see.
It looks like we ran some stops, definitely triggered some sell stops, and then recovered, and now we're right back above that trend line. So one day does not make a market. So that move yesterday and the close below the trend line doesn't mean that this thing's just going to go down now at this point. So I like that we've recovered back over that trend line, and hopefully we can have a positive close today.
Is the market, are we waiting on the report now? We got our flush out before the report.
Yeah, I tend to think that. I think we've had a couple things here. We're in delivery right now. So corn, the lows that we scored in March were during the delivery period on the March contract. So we are in delivery on the May contract at this point. We do have that report on Monday. So I don't doubt that this market went down, took out some stops, knocked out some of the weak link before this report. And I do think this report on Monday will likely show old crop stocks getting tighter by way of exports. I think the export demand will be increased. I think the feed residual number will offset that partially. I think you get a net reduction on old crop stocks. I think you get a new crop number that looks adequate. But then when we start to wonder if we can actually grow 181 yield, we'll start to put some weather premium back in. That might not be tomorrow, but I think that'll be something that we get in the next 45 to 60 days.
We're going to get to the report in a second. No soybeans. I'm seeing coiling. Are you seeing something different?
Yeah, the soybean market in the July contract even looks even more sideways, where we're just going nowhere the last 3 weeks. When you look at this November contract, some of those lows that we had last week kind of dipped down a little bit. But yes, absolutely, we are coiling. That market is consolidating, and it's got resistance right now at 1040. And so if we could get through the 1040 area, then maybe that would give us a reason to give us a push to revisit that downtrend around 1050, maybe test something else. But one of the things I noticed about the 2018 bean contract, which is what we had, that's the year that we were trading the trade war initially. We basically from April all the way through the end of May traded sideways, just like we're doing right now, except the upper end was 1060. Now the upper end is 1040. So the only thing I would cautious people on soybeans is if we do have some type of a negative trade impact here as we get to the end of the month, or if there's just not a deal going and we can't get through 1040, I think you got to have some type of downside coverage on new crop soybeans.
Your July Kansas City wheat, it's an absolute dumpster fire. What's the analysis?
A lot like corn. Hopefully that low yesterday just made a new contract low, ran some stops, and recovered, and we get a little bit of a short-term buying here. In reality, we got to get back above 550 in order to warrant the conversation of getting back into the 585 to 590 area. Previously, we had talked about how we had a trading range in the month of April, and that was essentially 63 up to 589. And so that gave us about a 36 cent trading range that we had. So if you drop that 36 cents from that 563, that gets you kind of down to these downside objectives that we've met here as of yesterday. So I don't know that I'm not going to say that we can't go a lot lower, but I think we are very oversold. We've got a very heavy short position from the funds right now. And I still think this market's even short term just prone to some quick little short covering bounces. But again, you got to go over 550 in order to warrant the idea that we've actually made a bottom and we're trying to go back up.
All right, Mackenzie, let's do our report preview.
Alrighty, so as you mentioned, USDA will release its monthly crop production and WASDE report on Monday at 11 Central Time. The report will include our first look at the new crop balance sheets for both the US and the world. USDA will use the March acreage numbers and trend yields in its initial look at the new crop corn and soybean situation. The new crop corn situation in particular is expected to look bearish compared to the current marketing year.
Let's start with old crop, Brian. So the pace of export sales and shipments in corn would certainly indicate to most analysts that USDA is too low in its export projection and that the export projection for old crop needs to come up and therefore the carryout needs to come down. A lot of people are scratching their head because the corn market has acted very poorly. Old crop corn's acted very poorly. And that's despite the idea that this carryout's going to be sub 1.4. Is the trade am I missing something there, or is the trade that convinced that new crop is going to be so incredibly bearish?
I don't know if it's all in a vacuum right now, Joe. Just, hey, we're focusing strictly on corn. One of the things that I think we've seen here over the last couple of months is the energy market break down substantially. Crude oil had some lows with a lot of commodities on March 4th, and we got a bounce, and then we took out those March lows and made another push lower. And there's a very large part of corn's demand that is an energy component. So I think that there's been somewhat of a pressure on corn because of crude oil. I think the wheat market and the break in wheat and the improvement in the wheat crop has put some pressure on corn. So, I mean, it's not everything's equal in a vacuum where, hey, if this carry out today is this, and then we have that same carry out months down the road, that the price should be the same. So I think we've gotten kind of a period here where the weather overall looks good for corn as far as the planting pace. I know there's always problems somewhere every year, but in the big picture, planting pace looks good. But it is pretty incredible that we're almost at the same prices for corn that we were trading, back in late summer, early fall, when we thought the carryout was going to be 2.2, 2.3, 2.4. Now we're trading a carryout closer to 1.4, and the price is almost the same.
That's the head scratcher.
That is the head scratcher. So there's got to be other components in there, other variables that are saying, all right, even though the carryout is close to half of what we thought it might have been before, not quite half, but getting that direction. There's other variables out there that are pushing the value lower than we're really where we think it should be. But also, if you believe that, then maybe this is a buying opportunity, right? Where if carryout drops. Now, to answer your question about new crop, yes, I think the new crop balance sheet is going to look better than the old crop balance sheet, but there's a lot of components in that too. All right. So in order to get this average estimate, somebody's got to first figure out what they think old crop carry out is going to be, because that's going to be your carry into the new crop.
Right.
Then you're going to use a 181 yield from the February outlook form. There's really no reason to use anything other than that for this particular report. We know what the planting intentions are going to be. That was from the planting intention and quarterly stock report at the end of March. So internally at Ag Market, we think that the one variable that really makes a difference for the carryout is going to be how they assess new crop demand. When you get a big production year like we're going to have this year, at least on paper, there should be a very stout demand assumption to begin with. Now, the concern is a year ago, the USDA had carryout on new crop corn at like 2.2. Now we're at 1.4. And that was mainly by way of a lot of extra export demand that they just didn't anticipate. So I hope that they give us a good demand number, because generally with these large production years, you will see good demand. And our internal number was a 1.85. So then what happens as we get into the weather market in June? Can we grow 181? We've never actually grown one, right? Oh. We've priced in more than that. The USDA's told us last fall that our crop was bigger than 181, and then it got smaller through harvest into that January report. So what do we price in at some point in the weather market year? Do we price in a 177, 175? And with all the extra acres, it makes it that much more difficult to grow a national average that's going to be 181. So I think there's going to be a conversation, again, next 30 to 60 days, that says, what if we don't have a 181 yield? And I think that gives us some upward price volatility. I think the producer has to be, again, in the mindset that they have to do some marketing in that time frame.
Well, I hope you're right, because the marketing situation and the markets have been frustrating as of late. Lack of opportunities. Let's jump to this US UK trade deal.
The US and UK reached a trade agreement on Thursday that will strengthen agricultural trade between the two nations. As part of the deal, the UK will eliminate its 19% tariff on US ethanol. Back in 2024, the US exported $535 million worth of ethanol to the UK, making it the top US agricultural export to the country. The agreement also expands market access for U.S. beef, although it includes provisions for increased imports of UK beef into the U.S. U.S. beef exports to the UK have historically been limited, largely due to British and EU restrictions on growth hormones. Currently, the U.S. exports only $32 million worth of beef to the UK. While the new agreement will ease tariffs and import rules for beef, UK officials have emphasized that domestic food safety standards will remain in place.
You look at this graphic here, ethanol and beef are the two first things mentioned. The UK has already been like the second largest importer of US ethanol. Perhaps they can import a little bit more. Just for perspective, the UK has a population of 68 million people ballpark. That's about Texas and California combined, but they use a lot less gasoline per capita. So maybe there's a little bit of room for growth here.
Yeah, I mean, Canada.
I don't think this is
I don't think ethanol is the part of this trade deal that everybody's going to be talking about.
No.
I would love to see something with India when you start talking population and growth potential that has to do with ethanol. I think if you could break that into India, then that would be something that would move the needle. But in the UK, I don't know. As far as the beef market goes, I know the growth hormones and a lot of the differentiations and regulations between the U.S. and Great Britain causes a little bit of a trouble thinking we're going to see a ton of additional beef exports. And that my mind is always like, why do I have to eat British beef and they get to eat U.S. beef? Like, can I just eat the U.S. beef? I would prefer that.
Per capita beef consumption in the UK is much less than the US, 36 pounds per person annually versus 59 in the United States. And I think trends in the UK especially are trending downward. I think they might be trending downward in the US also. In any case, I don't think this is the trade deal that we're looking for. I mean, it's good to see a trade deal. It's not the one we're looking for, though.
President Trump has expressed optimism that upcoming trade talks with China could pave the way for a reduction in tariffs. On Thursday, he voiced confidence that this weekend's trade negotiations would result in meaningful progress, suggesting that Beijing may be open to making concessions. Trump indicated he would consider easing tariffs on Chinese imports, which currently stand at 145%. If the discussions show positive momentum. His remarks caused the stock market to rise, with the S&P 500 and Dow Jones each rising 0.6% and the NASDAQ gaining 1.1%. Investor sentiment was further boosted by Trump's announcement of a new trade agreement with the UK.
Scott Bessent and Jameson Greer will be in Switzerland to talk with their Chinese counterparts this weekend. Brian, what are the odds of some sort of market-moving headline out of these meetings?
100%. There's going to be some.
It's going to move the market no matter what.
Yeah, there's going to be some kind of a headline that comes out of this meeting, and it's going to move the market. I don't know which direction it'll be. I don't know if the headline will be positive or negative, but could it yield tariff cuts? Well, could we tariff yield cuts? I don't know. If that makes sense. That's just a joke, but I think you come out of the weekend on Sunday night, and something's going to happen. There's going to be some dialogue between the two countries, positive or negative. It's going to have a spin. And that'll impact the Sunday night opening. I think it'll impact the equity trade. We'll potentially have a gap in one direction or the other. We've seen some gaps in equities, and the S&P 500 futures, the E-mini S&P, generally in normal trade, you don't see gaps in that chart. But now that we've got the new administration, we've had multiple gaps. And I think coming out of the weekend, you're like to see some type of headline that makes this market either feel really positive and gap higher, or negative and potentially gap lower. So I think the headline will be there. I don't know what it's going to be, good or bad.
Interestingly enough, to go back to soybeans, like we've seen nothing but consolidation. The soybean market is the one that you would think would be impacted the most by this, yet it seems to be impacted the least.
Yeah, there's again we're not in a vacuum where the only thing that's impacting values is the the trade talk. So yes, I would say that over the last 3 weeks, it has been rather incredible to watch July corn go from near $5 to near $4.40. We've had wheat go from, Kansas City wheat's gone from near 590 to 520, and then beans have gone from 1040 to 1040. So beans have definitely held in very well, but is it because of what's going on with trade talk, or is it because of, maybe the soybean values are holding in here as crops get planted to try and get some late acres bought?
I think that's what it is. I think it's acres. I think the trade is convinced that corn acres are going up like 1 million versus March, and beans are going to go down by that same amount.
Yeah, and that very well could be part of why the bean market's holding in here during planting.
Yeah.
Now you could make arguments, and I know we're going on some tangents here, but with nitrogen values and everything going on, where maybe corn acres actually come down a little bit. I've heard that argument too. I don't know.
No,
but I know you're like, no, that's not happening.
Well, nobody knows this,
right? But I do think that the soybean market is getting some support because of that late attempt to get some soybean acres in the ground here. Now, what are we looking at out of the weekend here? Short-term impact on a Sunday on the grain headlines out of China, because hours later we're going to get a WASDE report, and I think that'll really be the mover of the day.
Monday could be very interesting for a number of reasons. Let's go to the drought monitor.
So the majority of the Corn Belt remains free from drought conditions, largely due to precipitation received in late winter and early spring. However, drought conditions expanded last week in parts of northwest Missouri, northwest Indiana, and north central Illinois. Meanwhile, the High Plains experienced predominantly dry weather last week. Drought conditions deteriorated across portions of Nebraska, east central Kansas, western Oklahoma, and western North Dakota. When we look at the percentage of U.S. areas experiencing drought, corn country 20%, soybeans 15%, winter wheat 22%, spring wheat 37%, and cattle country 30%.
It's dry out west. Nebraska is really dry. Parts of South Dakota are really dry. There are parts of Minnesota, maybe a little bit of that northwest central or northwestern part of Illinois. But I don't know. Are we supposed to be concerned about dryness out west yet, Brian?
I mean, the dryness, the people out west are concerned about the dryness out west, but I don't think the market is obviously at this stage concerned about it. But we'll just keep going back to the big picture stuff. It's that all that dark red, in southwest Texas that kind of creeps west. That is what we need to watch. And if that starts to migrate north and east, then that is really the concern that some of the weather guys in the industry have been talking about, the potential for summertime. So, is there a reason to buy right today because of the drought monitor? No, we've seen, periods in the last year even where there's been substantially more of the growing region in drought. So, does a 20 some odd % number for corn get me excited today? No. But it's the forecast is going to start to warm up. It's going to dry out. I think in a couple weeks as we get into June, there's going to be some more yellow and tan on this map as we get closer to those conversations in mid to late June.
Let's go to some weather maps. Here's past precipitation. This is rainfall as a percentage of normal over the last 14 days. A lot of the central corn belt's been drier than normal, but then you got places like southern Indiana, Ohio, Kentucky, parts of South Dakota, northern Minnesota, and parts of North Dakota have been wetter than normal. Forecast over the next 5 days, pretty wide open. I know that planting is fast and furious in a lot of the central and western parts of the Corn Belt. Parts of the eastern Corn Belt, your Ohio's, and parts of Indiana, Kentucky, Tennessee are delayed a little bit because they've been wet. You got a little bit more rain coming to parts of the Corn Belt in the 5 to 10. And then you go out into that 10 to 16, and it's a little bit more widespread. And you do have some relief potentially for places like Nebraska and South Dakota. So I don't know. Those extended forecasts, maybe not super reliable, but that would be a fairly good situation if they get the crop planted and then the rains come,
Yeah, and it's interesting when you go through that sequence of maps, the one thing that you continue to see as far as where it stays dry, and maybe in this period there's a little bit of rain in there, but I keep looking at, as you look just south and west of Texas, overall, as the maps transition from one to the next, there is that dry pocket over there. So it's no rain out there, and Baja, Mexico. So again, that whole area just continues to stay dry. And yeah, we're going to have rain in the eastern Corn Belt. Eric Snodgrass was at our conference in February. He talked about that, the Eastern Corn Belt staying wet through planting through spring. That was not a surprise. So this moisture that we have here has been talked about months ago, and still with the potential of having hot and dry in summer. So we'll see. I mean, obviously, you know, everything is fluid. It's fluid every year during summer, and you just have to be on your toes.
Here's one additional look at the forward forecast. This is Euro model data, so slightly different perhaps than the stuff we just looked at, but a lot of the Corn Belt will be a little bit drier than normal over the next 2 weeks, with the exception of, again, Ohio, Kentucky, South Dakota, and North Dakota. Let's go to export sales.
U.S. corn export sales were strong last week, surpassing pre-report expectations. Net corn sales were reported at 65 million bushels. The print was up 64% compared to the previous week and 47% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales were reported at 14 million bushels. The print was down 12% from the previous week, but up 11% from the prior 4-week average. Mexico was the largest buyer. Net wheat sales were reported at 3 million bushels. The print was down 3% from the previous week, but up noticeably from the prior 4-week average. Mexico was the largest wheat buyer for the week.
Corn sales are fantastic. Second best book of the last 10 years. And we kind of talked about this earlier. USDA probably comes up on Monday, you think?
I think they should. The evidence is there. They came up last month, and they have reason to come up further. So again, I know the average estimate when we looked at those for the carry out for old crop is to just come down slightly, but I think I wouldn't be surprised if the old crop number is lower than the average trade estimate on corn.
Mackenzie, let's skip this Argentina story. Let's go straight to flash sales.
Alrighty, USDA, they reported multiple flash sales yesterday. U.S. exporters sold 8 million bushels of corn to Mexico. Of the total, 2 million bushels is for delivery during the current marketing year, and the remaining 6 million bushels is for delivery during the next marketing year. Exporters also sold 5 million bushels of corn to unknown destinations for delivery during the current marketing year. Additionally, exporters sold 8 million bushels of soybeans to Pakistan for delivery during the next marketing year. This sale marks the largest and first flash sale of U.S. soybeans to Pakistan since June 2022.
That's good to see. Corn out of the U.S. is still super competitive for old crop. Brian, if you're to make the counter argument that USDA should not raise exports, your argument is that Brazil's crop will be online in a month or 6 weeks, and that maybe we see a big collapse in export business during the last couple months of the marketing year. Do you think that that's a feasible argument?
I mean, you're going with what we know right now, which is the pace is ahead of USDA target versus what you think could happen. So I think it's an argument you can make. I don't know how strong it is, but the USDA and Seth Meyer did say that the demand assessments on this report would be taking into account what's going on with tariff talk and trade policy. I think that would be more of a statement towards new crop demand estimates than it would be old crop.
Yes. What did cattle do yesterday?
Cattle futures surged higher. Live cattle were 92 cents to $1.72 higher. It was a big day for feeder futures as we finally surpassed the $3 mark in both the August and September contract. Across the board, we saw gains ranging from $265 to $302. Box beef was mixed. Choice was up $174 at $347.89, and select was down 80 cents at $333.20.
Is cattle overdone yet, Brian?
So we've seen a lot of these legs higher in cattle, Joe. Obviously, it's in a bull market, and that's positive. But when you think about like the timing of these rallies and how big they are, we are getting to the point where I think the June cattle contract is getting towards the the back end of a rally here that requires a correction. And when I say that, I think about the movement in June from 185 up to what was it like 207-ish for a high. That was done in about 22 sessions. Then we've got a move here that I think came from April 9th. Now here we are, May 9th. That last low is April 9th. So it's been, again, about a month and about the same type of movement from a dollar perspective. So I think from a timing and from a pure how much price have we added, we're getting to that upper end and we're due for a correction. Absolutely.
Guys, outside markets on Friday, fairly quiet. Brian, thanks for joining us. Remember, guys, report on Monday. Have a great weekend. See you later.